All right, we got that. We're live and recording. All right, today, June 7th, 2023. And once again, we're going to be talking about insurance and your needs. And in this episode today, Bob Tassone with Port Financial Insurance. Good morning, Bob.
Good morning. Good morning.
Now, I got you here today, and one of the things that you have on your subject matter list is to talk a little bit about how to ensure that property owners that have rentals and their rental properties are properly covered, and anybody that might be doing fix and flips, the importance of builder risk policies and that kind of thing. So I'd love to hear more about what those products are and what kind of things and coverages you recommend for that. So take it away, man. Let's dive right in.
All right. Well, even before we get to a policy, when somebody wants to do any kind of renovation or investment properties or rental properties, the first thing you need to have is a plan,
Yeah.
because it's just not something you just stumble over and do it one day. It's a business, and you need a plan. And part of the plan is insurance, but there's lots of facets to the plan. And I talk to people sometimes who run into a situation where they think they can buy a property and then rent it out, or they can fix it and flip it or whatever. And when I start asking them questions, they start thinking, well, maybe I'm not ready to do this right now, or I've got to put a little more thought into it and make a better plan. So the first thing you need is a plan.
Yep.
But if you do have a situation where you have a rental property or a potential rental property, I'll say this: it might not be a rental property, but a property that you're going to buy and own but not live in.
Okay. So you're talking about a non-primary residence, something that's intended for investment, right?
Right. An investment property. That's the word I was looking for. Thank you, John.
All right.
Investment property. An investment property. So an investment property could be a rental property, or an investment property could be a fix and flip or whatever. When you have that property, so sometimes you say, well, I got this property, it was a foreclosure or whatever the circumstances were. I had the money, or I arranged the financing, and I'm buying this property. Now what? Well, if you're going to fix this property, we need to look at the systems in the house first. The systems are the HVAC system, the electrical system, the plumbing system, the roof system, the gutter system, the siding system. I mean, all of those systems come into play, because that's what the insurance underwriter is going to want to know are in good working order. Because when we do an insurance policy, we're saying, well, if something happens to this house, we're going to fix it just like it was brand new. And they don't want to insure something that's broken.
Right.
Because that's not what they're agreeing to do. They're not agreeing to put it back broken. They're agreeing to put it back working. And so that's why it can be difficult sometimes when you say, well, I'll just get an insurance policy on this, but the roof is kind of marginal. I need to renovate the bathroom. I need to renovate the kitchens. I got a fuse box in this house. It doesn't even have 200 amp service. I mean, there's all kinds of stuff like that. We can't do it. So if we've got a house that needs renovation, what we're going to go to, rather than a landlord policy, we're probably going to go to a builder's risk policy.
Makes sense, right? So how does that policy work? What would be the term of length of term that you would have for policy like that?
Okay. Well, it depends on the project. And a builder's risk policy can be renewed. So I usually recommend that we go with a shorter term, since we don't know how long it's going to take sometimes. And then you can renew it.
Yeah.
Typically, they are a 3-month or a 6-month or a 1-year policy. Now, some insurance agents are not as interested in doing these because the way that I get paid as an insurance agent is I get paid when the policy is placed, and then I get paid when the policy stays in force at renewal. A builder's risk policy usually isn't renewed.
Oh, yeah. Okay. So it's a short-term policy that's going to
Yeah.
convert to.
So sometimes the insurance agent is not as interested in doing that, but
I appreciate your transparency about that.
I
That's
feel
important to know.
that I'm trying to help my client, and there are other things that I can do for them besides a builder's risk policy. So anyway, I don't look at it that way, but some do. So some agents will just say they don't know how to do them, or they don't have carrier that will do them, or they just don't want to do them because they're too much work, whatever. I mean, it's kind of like, for a builder's risk policy, it's probably more work for me and less compensation, but that's not why I do stuff.
Yeah.
Okay.
Well, like real estate, what you do is a relationship-based business, right? So when you have that policy in place, you've got a client that's going to need need service and insurance on another something, whatever it ends up being, down the road. Because as you described earlier, sometimes these fix and flips might end up becoming rental properties. So there's always an exit strategy. So when I work with somebody that's got a property that they want to acquire, we're always talking as if it's an investment property, what's your exit strategy? And then that exit strategy, sometimes it's converting that fix and flip to something they're going to sell. Sometimes it's putting it into their portfolio for buy and hold. And then there's any number of other, investment strategies, exit strategies, so forth. So with that in mind, does that give us the opportunity to segue into landlord coverage for a rental property?
Well, we can. I mean, the landlord coverage is really a lot simpler than the builder's risk. The only difference between a landlord policy and a homeowner policy, there's a couple of differences. The landlord policy doesn't usually cover contents as much, because if it's a rental property, the property doesn't have your stuff in it. Now, you might have some stuff in it, like a refrigerator or washer and dryer. Those things are not fixtures.
Yeah.
So there is a limited coverage for contents.
Okay.
But otherwise, that's one difference, is where a typical homeowner policy might insure contents for 50% of the dwelling value. A rental property policy, a landlord policy, might only insure for 10%, or it might not insure things at all, that are in the house.
Which is another reason why somebody that's renting a home. So if anybody's actually a tenant in a property, they should always have, and most landlords should advise, if not require, that their tenant have
a renter's policy.
A renter's policy to cover their own personal belongings.
Yeah, because the bad thing that happens, let's say, and a fire can happen more in a renter situation than in a homeowner situation, because usually homeowners are more responsible than renters.
They understand. Yeah, that's absolutely the case. And it's not necessarily, by some de facto credential. It's just that homeowners tend to have a lot more vested interest in their property because they're putting they're there. I mean, they're
there, and
so a tenant is
there.
simply
Yeah.
paying to live there, right? So there's definitely a difference.
Well, let's say there's a kitchen fire, regardless of whose fault it is, whether it's something was left on the stove, or there was some electrical problem, or whatever, but there's a fire. Anytime you have a fire, there's smoke. And anytime there's smoke damage.
Yeah.
And that that landlord policy doesn't cover damage to contents. So require your renter to have a renter's policy, because if their clothes get all smoky, they should make a claim for that on their renter's policy, not on you.
Yeah.
And that's why you require them to have it.
That's very, very valuable information and very, very valuable advice. And so Bob, this is great content for anybody that's looking to either consider owning a property as a rental property or considering getting into the fix and flip type of business, because I mean, this is important stuff to know. If you are going to do a fix and flip, I'm glad that you are able to offer the builder's risk policy. It's nice to have another source for that, because not every, as you described, not every insurance carrier will provide it. So knowing somebody here locally,
the special policy. So there's another difference between the homeowner policy and the landlord or dwelling policy.
okay.
And that is, with a homeowner policy, when there's a fire, you have loss of use benefit. So the loss of use means that my house had a fire and now I need to live somewhere else. And so depending on how long I've got to live somewhere else while they're fixing my house, I need money to pay for either a long extended stay motel, or I need to rent an apartment or another house to live in while they're fixing my house. Well, with a landlord policy, you have loss of rents coverage.
Okay.
Okay, because so I had this rental property and I was renting it for $1,500 a month, and that $1,500 was paying my mortgage payment. That's how it was working, right?
Yeah.
Well, now there's a fire. The people can't live in the house until it's fixed.
You're still
They're not going to pay rent anymore, but the mortgage payment continues.
It's still due every month.
There's nothing stopping that. So you have a loss of rents coverage on that. And that's very important, obviously, because you don't want that fire, that even a minor fire can put a house out because of the smoke damage, can put a house where it's not habitable for a period of weeks or months.
Yep. Important distinction. Very, very important distinction. Good stuff.
And it doesn't take a lot of smoke. And I was thinking about smoke this morning because you probably noticed when you went outside, you can smell some smoke around.
Yeah, we got a little bit of a weather condition here in the greater Williamsburg area with some health alerts and the air quality alerts from the fires up in Canada.
Yeah. So smoke permeates everything. I mean, good reason to not allow your people to smoke cigarettes in your rental property, because it gets in everything. It'll get in the walls. It gets in the carpet. It gets in everything. Smoke goes everywhere.
Yep, it does. It is non-selective in what it.
But I'll tell you what, I mean, maybe we took enough time today on that. I can talk about builder's risk next time we meet.
Sure. Builder's risk.
Yeah.
That's a lot more detail I'm sure we can talk about on both of those subject matters. So I really appreciate your sharing your insights with that, because certainly as a real estate investor myself, I do have properties that need to be concerned about this thing. And, you know, just coming from last night, there's a local real estate investor group meetings here on the first Tuesday of every month, first Tuesday of every month, with the exception of next month. It'll be the second Tuesday because the first Tuesday is July 4th. Okay. Here in Williamsburg, there is an investor group. And Bob, you've been there.
I've been there, and I have another meeting now that's conflicting with that, but I'm glad you told me it's the second Tuesday next month. Maybe I'll be able to drop in.
That'd be awesome. Yeah. So, I mean, that's a good group of people and it's well open to the public. So if you're interested, anybody that's seeing this, you're welcome to join in. If you have any questions about real estate investing, you can certainly reach out. John Polson here with the memory group, eXp Realty in Williamsburg. Bob Tassone with Port Financial Services. Bob, your contact information will be in the description on the page, and certainly we can reach out to me here and either through the messenger link on the page or text or call me at my phone number 757-707-4664. In the meantime, Bob, I wish you a happy and wonderful week. Enjoy the weather that we've got. It's all we got.
All right. Well, it's always good to be with you, John.
All right, man. Thanks a lot.
Take
Bob.
care. See
Bye.
you now. Bye.